and welcome to the Gravita India Limited Q1FY25 conference call hosted by Antique Stock Broking. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded, and I've handed the conference over to Ms. Manish Mahawar from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Neha. On behalf of Antique Stock Broking, I would like to welcome all the participants on the 1Q FY24 earnings call of Gravita India. From the management, we have Mr. Yogesh Malhotra, Whole-time Director and CEO, Mr. Vijay Parikh, Executive Director, Mr. Naveen Sharma, Executive Director, and Mr. Sunil Kansal, CFO on the call. Without further ado, I would like to hand over the call to Mr. Malhotra for opening remarks, post which we'll open the floor for Q&A. Thank you, and over to Mr. Malhotra.
Thank you, Mr. Manish. Good afternoon, ladies and gentlemen, and welcome to our Q1 FY25 earnings call. I trust you have had the chance to go through the earnings presentation and financial results that were uploaded on the stock exchanges. I'm pleased to announce that Gravita has begun the year on a positive note, achieving a strong performance in the first quarter of FY25. Before we delve into the results, I would like to share some strategic highlights and project updates. Due to stringent government regulations under BWMR and EPR, the availability of domestic scrap is increasing, and consequently, our sourcing of domestic scrap is also rising. Of the total scrap Gravita has sourced in India in Q1 FY25, more than 40% is domestic scrap, depicting a growth of more than 50% in volume on year-on-year basis. As you're already aware, Gravita engages in back-to-back hedging of lead to mitigate risk and is also working on a hedging mechanism for aluminium. The Ministry of Finance has notified aluminium alloy under the Securities Contracts Regulation Act of 1956. We anticipate the launch of the aluminium alloy commodity derivative on the MCX shortly. This development will play a crucial role in managing the risk associated with the price volatility. By effectively hedging against price fluctuations, we can ensure more stable and predictable financial outcomes. This stability will ensure that we allocate resources more efficiently, make informed strategic decisions, and ultimately scale and expand our aluminium business with resilience. We are setting up a pilot project for lithium-ion recycling and our first Indian tire recycling plant at Mundra, both of which are expected to be operational in H1 FY26. The paper recycling plant and steel recycling plants are anticipated to be operational by financial year FY27. We are currently in the due diligence phase for both the projects. Gravita is also advancing strategically to meet its short-term, mid-term, and long-term goals by FY27, FY34, and FY50, respectively, as outlined in its ESG roadmap. By embedding ESG principle, Gravita demonstrates its dedication to long-term sustainability and value creation. Coming to operational performance, we saw a substantial increase in volumes in Q1 FY25. Overall, we saw a growth of 29% in volumes. Volume of lead, aluminium, and plastics stood at 41,900 tons, 2,460 tons, and 3,190 tons, respectively. Coming to quarterly EBITDA per ton performance, EBITDA per ton of lead, aluminium, and plastics stood at 19,321 per ton, rupees 19,414 per ton, and rupees 10,077 per ton, respectively. Moving to financial results for Q1 FY25, revenue for Q1 FY25 increased by 29% to rupees 908 crores. 47% of revenue in Q1 FY25 came from value-added products, which is in line with our vision of achieving 50% revenues from this category. Adjusted EBITDA for Q1 FY25 increased to rupees 91.24 crore, up by 33% on year-on-year basis. EBITDA margin stood at 10.05%. PAT showed significant increase of 29% to rupees 67.33 crores on year-on-year basis in Q1 FY25. PAT margin increased to 7.42%. In conclusion, Gravita is making impressive strides toward its clear vision 2028. Our strategic focus is on expanding existing verticals, aiming CAGR growth for a volume above 25%, profitability growth over 35%, and ROC exceeding 25%. We are also committed to raising our non-rent business share to over 30%, using more than 30% renewable energy and reducing energy consumption by over 10%. These efforts underscore our commitment to sustainable development. Our successful strategies, including capacity expansion, increasing the proportion of value-added products, and managing risk through back-to-back hedging, have resulted in robust and sustainable margins. With over 31 years of recycling expertise, 12 advanced eco-friendly facilities globally, a footprint in over 70 countries, an integrated supply chain, stringent BWMR and EPR regulations, and strong support from stakeholders, we are poised to achieve our vision 2028, as well as diversifying into new businesses, new areas like lithium-ion, steel, and paper recycling. That's all from my end. I would now request to open the floor for questions and answers. Thank you, and over to you, Mr. Manish.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thanks for taking my question, and congratulations for a great performance. I have two questions, sir. The first one is on aluminium. If I look at EBITDA per ton, that has increased materially, while production is, of course, a little bit subdued. Maybe because so far we have not got that hedging clearance. So just wanted to understand the key driver behind this EBITDA per ton improvement. Is it purely LME driven, or LME scrap spreads were a little bit more benign? And how do we see it going ahead? So that is the first question, sir.
Yeah, Amiji. So basically, this improvement in EBITDA definitely partly came from the LME, which is the metal prices which improved in this quarter. So as we already discussed that this aluminium, because we are not fully hedged on this metal, so always when the prices are higher, we get slightly better on the margins, and definitely on the other side, when the prices are lower, we get lower margins. So, but as Yogesh mentioned, that we are going to, in future we are going to hedge this metal also, as we do in lead. So we are discussing this matter with the MCX, and they are coming up with the product. So in future, this will be in the range of 15 to 16 rupees, which is a stable kind of a margin per ton, 15 per kg. So 15,000 rupees per 15 to 16,000 rupees per ton. So that can be a stable margin for future. We can assume. Yeah.
I would also like to add here that we have got some contracts in India, price contracts in India, and therefore we are shipping some material from our overseas locations into India. Most of these price contracts are on the basis of M-1 or M-2 pricing. So kind of giving a natural hedge to our positions, inventory positions overseas. Because of this, you will see, even if the MCX is not there, you will see some stable margins coming in the next quarters.
Okay, got it. The second question is on we have closed some subsidiaries, quite recently, Jamaica, Ghana, etc. Now, we were expecting, while these, two of them were non-operational at the moment, but can you just clarify the reasons behind closing these subsidiaries? Does it change our business case in any way? Just wanted to understand that.
So, yes, Amiji, you're right. We have closed two subsidiaries, and one in Costa Rica and one in Jamaica. But these were earlier we were into plastic PET recycling business in Central America. So at that point of time, we were having one plant in Jamaica and one scrapyard in Costa Rica. So we were doing some processing of PET recycling in Nicaragua also, which the subsidiary we sold few years back while in COVID. There were some scrap shortages because of COVID. So we exited from those countries. So these were some operational non-operational companies which we were trying to close it. And there is no impact on the business that we sold this equity of Nicaragua entity, and we were in the process of selling these, closing this subsidiaries in Costa Rica and Jamaica also. So because we exited from this PET recycling business fully, but now we also plan to have PET recycling business in India, where we are planning to put a independent PET recycling facility for food grade plastics, for food grade PET in India. So that is a upcoming business because we have that experience in Nicaragua.
Okay, so the closure of these subsidiaries doesn't mean that our future plans that we have in other geographies of expansion into other verticals also, maybe steel and rubber. There is no impact.
So there is no impact because we are coming out of those geographies. We have already come out of those geographies. So, but we have plans in Central America, but in some different geographies. So it will not impact any future plans, any expansion plans in the future.
Okay, great. Thanks for the clarification. All the best.
Thank you.
Thank you, Vijay.
Thank you. The next question is from the line of Bharat Shah from Ask Investment Managers Limited. Please go ahead.
Yeah, hi. You mentioned certain targets. I couldn't fully catch all of them. What I understood was that ROC 25%, which we have talked about many a times, growth rate of 25%. Did you mention profit growth of 35%, or at least that's what I understood?
Yes, sir. So we've always been saying that although the volume will grow at 25%, but because of various initiatives, the bottom line would grow by more than 35%, because there we are trying to increase the value-added products content. There will be certain economies of scale, and also the new verticals of plastic and rubber are a little more profitable as compared to lead and aluminium. So definitely the bottom line target to increase bottom line growth by around 35% in the next 3 to 4 years.
So other reasons are like, sir, the fixed cost is remaining same. Like the interest cost is also, we are trying to bring it down by having a more cash flow, better cash flows, because of the more business coming in from the domestic part. So the improvement in bottom line, like profitability, will be better than the growth in the volumes.
Okay. Now that was good to know, because all along in many discussions that we had had, my impression on top line growth of about 20-25% I was well captured, but this is an interesting new addition. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Sumangal from Kotak Securities. Please go ahead.
Yeah, good afternoon, sir, and congratulations on a very strong set of numbers. My first question is with regards to the new businesses or new categories which we are entering. Are we looking for any technology tie-up or we think we are self-sufficient, especially for lithium-ion recycling, lithium battery recycling? Number one. Number two, have you started collecting scrap for these businesses? And once these recycling plants set up, what sort of margin should we expect? Given the initial phase, do we expect the initial few quarters to be loss-making, or some sort of normalized level of margin one can expect given the visibility on the scrap side for these businesses?
Sir, in lithium-ion battery, it's going to be a pilot project. So in lithium ion, the first part of the technology of creating a black mass is basically over-the-counter technology that we are buying. And the second phase where we will be refining metals or extracting metals out of it, that technology will be building in-house. So that is why it's a pilot project. Right now, although we have certain interest to import scrap from other countries also, but all of this has to wait till the time we have set up our own plant. And battery scrap in India is not currently to the tune that you can buy it currently. So the scrap will start coming probably in a matter of 2 to 3 years. But there is some scrap availability in some of the developed countries from where we have already seen some interest. As far as rubber is concerned, it will be a profitable business right from the day one. Of course, there will be some time to set it up, but it's going to be a profitable business. But lithium-ion battery recycling is just a pilot project. We want to be there to understand the technology better, to understand the flow of material, to tie up with battery and car manufacturing companies. So that is why this is more of a strategic business currently.
Understood, sir. Understood that.
Thank you.
Sir, my second question is on the aluminum business. We were talking about also a very strong growth this year. Do we expect that to now start reflecting from the second quarter onwards, or there is some bit of a kind of a
yes, sir. So what I mentioned earlier also is that we have now got some contracts in India which are stable in nature, in the sense that they are based on, the pricing is based on M-1 and M-2, that means 1 or 2 months prior. So based on this, we can now start production at our overseas plants and start shipping it to India. So we have already done that, and currently around 2,500 tons of material is already shipping towards India, for which we have a pricing offer already. So you will start seeing these results from Q2 onwards. Okay, growth.
Additionally, there is another plant we are starting in Ghana, which is upcoming shortly. So that will also add up some volumes for aluminum business in overseas.
Understood. And from when do we expect the hedging instrument be available?
So we are expecting it in this Q2.
Okay. Understood. My next question is on the penalties on OEMs for the recycling obligations. So we were expecting this to be somewhere around June, July. I mean, what's the latest timeline? And from our interaction with the ministries and with the regulators, when do we expect this to be implemented?
Yes, that particularly EC is under discussion with the CPCB and the manufacturer and producers of batteries, and with consultation with recyclers. So I think this should be finalized within this Q2. Lead-acid battery almost finalized between both of them, while in case of lithium-ion batteries, it is still under some discussions, but it will be released together by this quarter itself.
Understood. That's all from my side. Thank you and all the best to the team. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. Thank you. The next question is from the line of Meet Bharat Bhai Rakhyaj from Anubhuti Advisors. Please go ahead.
Yeah, hi, thanks for the opportunity and congrats on very good numbers. My first question is to Sunil sir. Sir, in this quarter, other income is reduced materially QOQ and YOY basis. So can you give us the bridge or breakup between the forex gain or loss, the commodity forward contracts gain or loss, and the treasury income?
Yeah, you're right. This quarter, other income is showing slightly lower. So there are two components of other income. One is operational other income, and another is a non-operational other income. So operational other income, we consider whatever contribution is coming from the commodity contracts or currency contracts, so that we consider as the operational part, and whatever is coming from other sources like interest or bank interest or something like that. So that is non-operational part of other income. So this quarter, approximately 3.57 is the operational part, and rest is the 3.3 crore is the non-operational part. So historically, whatever hedging income is coming from the commodity contract, so that also fluctuates, because whenever we are getting better from the operational side, we lose something on the exchange contract. So there is a compensation of a physical contract. So this quarter, it is on the exchange part, it is a negative slightly 0.86 crore. So that is shown in the other expense part. So that is the reason, and in the previous quarter it was on the positive from the exchange part, and we were losing on the physical part. So it's a compensation. So that is the reason we consider it as an operational income. So this is the reason in this quarter it is lower.
Okay. So 3.3 crores, which is non-operational, 3.57 which is operational. Out of that, 0.86 is charged to other expenses, right?
0.86 is a negative which is already covered in the other expense part. So there is no impact on the other income. So other income part, 3.3 crore is the non-operational part, which we have not considered in the adjusted EBITDA.
Okay. Only 3.57 is considered.
Yeah.
Understood. And the second question is on employee cost. So YOY, the increase is only 9%, but if you look at QOQ, it is a material increase of close to 60%. So just wanted to understand whether we have any annual incentive payout in Q1?
Yeah, you're right. So basically, we are expecting a larger growth in this year, as we were lower in the volume growth in the previous year. So we are targeting to cover. We are trying to cover up part of that also in this current year. So we have announced some incentives also, which is close to 9 crore additional incentive. We have make a provision for this in this Q1, and there is some part of annual increment also, which is 9 to 10% annual increment we do. So that is also some provision is taken on that account also.
So Q2 should likely witness a dip in employee cost, right?
So slightly, maybe. So I think it should be in this range only.
Okay. So you are expecting another provision of incentive in Q2 as well?
Because we have whatever incentive we have taken in this quarter one, that is in the proportion of in this quarter for this quarter only. So whatever will be for the full year, so 1/4 we have taken in this. So that way we have.
So if we meet our targets, if we keep on meeting the targets, then definitely the salary component would be similar. So you can expect a similar numbers in this.
Understood. Okay, thank you.
Thank you. The next question is from the line of Keshav from Roxan Investors. Please go ahead. Mr. Keshav, your line has been unmuted. Please go ahead. Due to no response, we move to the next question, which is from the line of Manav Vander from Wallfort PMS. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, please.
Thank you so much for the opportunity, and congratulations on the good set of numbers. Sir, I had 3 questions. I just wanted to understand, when will the rubber plant be operational?
So the plant for rubber recycling in India, although we already have plants outside India, but most of those are used for captive consumption. The rubber plant would be operational by H1FY25.
FY27?
26, sorry. 26.
26. Okay. Okay. And sir, the next question is on the capex side of it. In our presentation, it's written around 600 plus crores of capex till FY27. So will it be debt funded or internal accruals, and how will it be?
Yeah. So this 600 crore capex, it will be majorly from the self-funded. We are not taking any incremental debt except small debt for working capital for the future. So we have enough cash flow for funding this incremental capex also and part of working capital also. So we are not going for the debt for this capex.
Okay, understood. And can you give the capex numbers for current year FY25?
Sorry,
FY25 capex numbers, can you give, sir?
It is estimated at approximately 180 crores, which includes 40 crores of, which includes 140 crores for the existing verticals and 40 crores for new verticals.
Okay, sir. And the last question, sir, about the profitability side of it, as you know, the presentation mentioned around 35% growth YOY CAGR till FY28. So is it safe to assume that the PAT would be around 800 CR in FY28?
So we have not calculated that number, but yes, 35% volume growth, PAT growth of 35% on PAT basis, on CAGR basis.
So it would be around 750 to 800 crores, yes, you're right. If we achieve our target.
Okay. Thank you so much, sir. That's it from my side. Congratulations.
Thank you.
Thank you. The next question is from the line of Bhuvan from Tiger Assets. Please go ahead.
Hello, am I audible?
Yes, sir.
I just wanted to know what is your sourcing strategy in lead? How much percentage comes from OEMs, how much from other dealers, and how reliable and how stable are the prices? Yeah.
So in India, most of the procurement that we are doing currently, around 80% is through OEMs, where we have a tooling kind of arrangement where we get a fixed margin. So it doesn't matter how much variability there is in the prices of those material is, because eventually you only get processing charges from the OEMs. So it's pretty stable as far as the profitability is concerned for us in that business.
Okay, thank you. And I wanted to know, in lithium and recycling, which technology you would be using, hydrometallurgy or pyrometallurgy?
So hydrometallurgy definitely, but we would have to develop that technologies on our own. So it's a little premature to talk about what kind of, so it's generally in hydrometallurgy only, but it will take some time to develop that technology. So maybe next year we can talk about that technology also.
Okay, like presently, what is the progress in your R&D?
Sorry?
What is the progress regarding this technology which you are developing?
So see, we have already decided to set up a plant. As I mentioned that there are two phases. The second phase would be where we would do hydrometallurgy, and we've already earmarked the capex and the equipment that has to be bought. So we'll be buying that equipment and then we'll do the R&D of refining in those machines or plant and machines itself.
Okay.
So once the equipment is installed, only after that you will be able to know the development on that phase.
Okay. Any idea how much would be incurring capex for this segment?
In this year, it will be around 40 crores this year. But overall, around 70 to 100 crores would be on lithium-ion battery in the next 3 years.
Okay, that was helpful. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Siddharth Malhotra from Kotak Institutional Equities. Please go ahead.
Hi, sir. Congrats on a great set of numbers. Just a quick question. Sir, can you tell me what our net debt level is as of 1Q FY25?
Yeah. So our gross debt is around 550 crores and net debt is around 470 crores.
470 crores. And this was around 450 crores last quarter. So am I given to understand that our working capital days has remained at a similar level as last quarter? Because if I recall correctly, that number was slightly elevated at around 99 days. So has the working capital come down?
Yes, working capital, because as Yogesh mentioned in his opening remarks, that we have sourced more scrap from the domestic market. So that brings the lower working capital for us. So yes, definitely, proportion to the business, the working capital days is lower.
And any chance you could just break it down into inventories, receivables and payables for me, or perhaps give me some number on the working capital days versus say 4Q FY24?
So working capital days was close to 85 days, which came down to around 80 days in this quarter.
And we are talking QOQ, right?
Yes. So I am talking about Q4 to Q1.
Okay, understood. This is helpful, sir. Thank you. That was it, sir. My end.
Thank you. The next question is from the line of Janish Karia from Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. So out of the FY25 capex target, how much has been incurred till date in first quarter?
Actually, it's very difficult to give you an update on capex on a year-on-year basis, but probably it's around 15 to 20 crores so far. But
and towards the existing vertical?
Sorry?
This 15-20 crores will be incurred towards the existing vertical?
Yes.
Okay, and like we see that there is no significant capacity addition on a sequential basis. The capacity remains at 291,000 tons. So when will the new capacities be added during FY25? So around 50,000 tons is the target. So when can we expect it?
So you can expect in this quarter itself, as we speak now, our aluminium capacity in Ghana is being installed. So hopefully in a couple of days you'll get a news about that new capacity also. And then we have various new capacities lined up. We have increasing capacity at Mundra and other plants also. So it's in line with the total capex plan. Okay. So hopefully next quarter you'll hear some capacity increases.
Okay. So next is that our capacity guidance for the next 3 years, the capacity is growing at a 19% CAGR. However, we are guiding for a 25% volume CAGR. So if I assume the guidance to be achieved, our capacity utilization at that level would have been around 72 to 75%. So is it possible for us to operate our plants at that peak utilization levels, or what is the peak utilization level that we will be comfortable with?
Yeah, peak utilization level should be close to 75 to 80%. So even we should be close to 75, between 70 to 75% even after this growth of 25%.
Yeah, okay. And I guess you have answered my next question earlier, but if you could just repeat, if the aluminium EBITDA per ton, which is around 19,000 rupees in this quarter, is that sustainable for the year?
No, actually, the sustainable number for aluminium recycling is around 14 to 16 rupees per kg. So you will have some variation till the time that hedging mechanism is in place. So you will see some quarters where you will get more EBITDA numbers, higher EBITDA per ton numbers, and you will have some quarters where you will have some lower EBITDA per ton numbers. But hopefully in this quarter itself, we'll have this mechanism in place. On the other hand, we also, as I mentioned, we also have this agreements in India now, which will work as a natural hedging mechanism for us. So you can see some stability in these numbers going forward.
Okay, sure. And just last one question on the lead margins. So lead, we have always been saying that 17 to 18 rupees per kg is the sustainable EBITDA for the lead segment. However, if I see the last 3 to 4 quarters, we have been delivering around 19 to 20 rupees per kg. So is that a sustainable change, or is it just the hedging gains which are playing out and the cycle can reverse and we can go back to 17, 18 rupees per kg?
So basically, yes, you're right. Earlier we used to have 17 to 18 rupees kind of a EBITDA margin for lead, but which we have improved because of the more volumes coming in, and we have improved from 18 to 19. So now we can say that the stable margins for lead is in the range of 18 to 19 instead of 17 to 18 earlier. So there is no impact of metal pricing in this lead case.
Perfect. That's very helpful, sir. Thank you and all the best.
Thank you. The next question is from the line of Khush Nahar from Electrum PMS. Please go ahead.
Yeah, am I audible?
Yes.
Yeah, thank you for the opportunity, sir. I just wanted the percentage of domestic scrap collection that you have done for the Indian plants for this quarter.
Sorry, can you come again, please?
This percentage of domestic scrap collection for our Indian plants
42%.
for this quarter.
Around 42% of the total procurement that we did was domestic scrap.
Okay, sir. Thank you.
But in terms of volume, it's around 50% year-on-year basis, increase of more than 50% year-on-year basis.
Okay, thank you.
Absolute numbers.
Yeah.
Thank you. The next question is from the line of Chetan Thakkar from Ask Investment Managers LLP. Please go ahead.
Good afternoon, sir.
Good afternoon.
Yeah. So I had just two questions. One primarily was on what is the underlying volume driver for lead in this quarter, and how should we see that going forward for the remaining of FY25?
So basically, the basic underlying factor is the overall procurement of scrap, availability of Indian scrap in India. So that is the basic underlying factor, and as I mentioned that our overall scrap availability has increased, and it continues to increase because of battery waste management rules. So you can expect the similar growth numbers going forward also.
So this number is primarily from our anchor clients that is driving this volume growth?
In India, yes.
In India.
There is a growth with overseas numbers also. So there is organic growth in each of the territories we are available, and some part of it in India is coming from these new battery waste management rules, regulations also.
Possible, sir, to break out what would be the difference between the two in terms of contribution to growth, or difficult to do that?
So you can expect around 8 to 10% growth coming from organic increase.
Mm-hmm.
And balance is coming from increasing domestic scrap availability.
Got it. And so in terms of the situation from volumes moving from Africa to Europe, where we are facing the Red Sea issue, how should we look at that from an FY25 perspective? Is that resolved and we should now assume volumes will start to inch up?
Yeah, we've already mentioned earlier also that these remain some temporary issues. Generally what happens is that either you shift to a new customer, that we've done, and in some cases the price of scrap in those geographies come down. So it's a combination of both of these, and now there is no problem for us going forward as far as Red Sea issue is concerned.
Understood. And the second question was on the depreciation line item. That has been a little volatile. So it moved up from 7 crore quarterly to 12 crore last quarter, and it's back to 7 crore. So what is the factor that drives this volatility, and how should we look at this?
So, yes, in this last year, in the quarter 4, there was some additional depreciation on account of some, we have a plant in Ghana where the currency was moving significantly. So because of that, there was a additional index which was applicable on this. So it increased the value of the assets of the company, and also consequently increased the value of depreciation also. So that was the reason of higher depreciation in that Q4 of last year. So, but there is sustainably, if you see, now whatever depreciation is there in this quarter, so that at the current level of assets, it is going to be similar. So that future, we will not see any significant volatility in case of depreciation.
And in case that inflation persists, then probably Q4 end will be generally the revisiting period in terms of what would be the asset value and hence consequent impact on depreciation. That will be a fair understanding.
So there was one-off case of approximately 3 to 4 crores that came in Q4 of last year. So I don't think anything coming in this year because. But yes, you are right. Definitely, we revisit every end of the last quarter four of every year. But we don't see anything now coming up.
Got it. And the last question on the rubber plant. What will be the capacity in terms of TPD that we are setting up and the capex for that in Mundra?
Rubber plant, we are expecting to start with for this first plant. We are expecting a capacity of 9,000 tons in India.
This is annual 9,000 tons.
Yes.
And the capex for this?
Capex for this is approximately, I can give you the number. Approximately 30 crores.
30 crores. Great, sir. Thank you so much for this. All the very best. Thank you.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. What should be the volume growth this year?
Yes, so volume growth should be this year. We are targeting, again, we cannot say exactly growth for this year, but yes, on a 3-year basis, we are targeting 25% on 3-year basis.
Okay, but this year should be better than FY24.
Year should be better.
Okay, and sir, lastly, what should be the tax rate for the year, if you could give a range?
Tax rate should be close to, again, 10 to 11%, which we normally have certain exemptions in overseas and India also. So for next 2 to 3 years, it is going to be in this range.
Sure. Thank you, sir. All the best for the quarter. Thank you.
Thank you. The next question is from the line of Astha from Pekday Advisors. Please go ahead.
Hello. Good afternoon, everyone. I just wanted to ask the management one question. First, from which quarter can we see the volumes to start rising for plastic and aluminum segment?
So in aluminum, we can see the rise in volumes coming from Q2 at the max from Q3.
Okay, Q2 to Q3. And for plastic, sir?
Volume from next quarter itself. Plastic is going to take a little longer because it's a little different in the sense that still the implementation of EPR is going to take some time as far as consumption of recycled plastic is concerned. So, and development of plastic product also in the organized sector is going to take some time because it's not like metals where you can just produce it and you can use it as a recycled product. Plastic is going to take some time longer. Probably by the end of this year, you will see the growth coming in plastics also.
Okay. Got it, sir. Thank you. That's all from my end.
Thank you. The next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Hello, sir. Thank you for the opportunity. The capacity utilization rates hover between 55 to 67%, and this quarter it was very good. So, wanted to understand first, how much of that was because of the pent-up demand which was not executed maybe the next previous quarter because of the geopolitical reasons. Also, our long-term vision, you mentioned around 70-75%. So, do we face any constraints in achieving 100% capacity utilization because of any bottleneck in the process? What do you think about that?
No, actually, it all depends on where the scrap, because scrap is not something that comes in a constant manner, in a linear manner. So there are some problems in achieving more than 70-80% operational this thing. But with more Indian scrap availability, the total capacity utilization in India is definitely going to go up. So that is what is going to be the factor in the long term, where we expect the domestic scrap to be to the tune of around 70-80% of the total Indian business. So that is one area where we would get higher capacity utilization. And then in other verticals like plastic and aluminium, the capacity utilization is still at a very low percentage. It will also increase going forward. When, for example, in aluminium, we are not going in for 100% capacity utilization because of no mechanism for hedging for that product. So it will take some time. As and when these things, the hedging mechanism comes up, you will see increase in capacity utilization of aluminium also. So in the longer run, definitely 75 to 80% capacity utilization is something that is very achievable.
So the supply of enough scrap is a constraint, right, for us achieving a higher capacity utilization, and not the demand from the manufacturers, right?
So what happens is that because ours is not a very capex intensive business model, so we keep higher capacities because, as I mentioned, that it's not a linear flow of material. So generally, to make sure that if there is additional quantities of scrap available, we can process that also. So we keep a higher capacity always there. But with domestic scrap and with long-term agreements with OEMs, we can increase we don't have to increase the capacities in the same ratios as we used to do earlier.
Okay, got it. Also, like, how do you calculate this utilization rate? Because I understand it's a blended utilization rate. So can you give some idea on how is the utilization rate across lead, aluminium, plastic, and other commodities?
Yeah, just 1 second. So lead is close to 70% at this moment for this quarter, and aluminium is close to 45%. Plastic is again 40%. So blended comes to around 65, 66.
And copper?
We don't do copper.
All right, sorry. Also, I wanted to understand what is the lead capacity utilization of Chittoor plant, if any idea on that front, because OEMs are also coming up with the capacity. So, what are you seeing on that front?
67. Yeah, Chittoor plant capacity utilization is close to 67-68%.
And it has always been like that in the past as well, and do you expect the same in the future?
Yeah, on an average, it is in the range of 65 to 70% for lead.
Okay. So also on the lithium-ion front, right? So what is the typical scrap rate per battery from EVs and versus the lead-acid battery? And what is the kind of regulation on lithium-ion battery recycling? And the kind of recycling which is happening in terms of tonnage for lithium-ion across India and globally right now and maybe 5 years down the line?
Actually, the prices of these battery depends on what type of batteries are the lithium-ion battery. There are one thing called LFP batteries and another is nickel, molybdenum, cobalt batteries. So the price varies. So as low as from 90 rupees kg to 250 rupees a kg. So as of now in India, the battery generated is mostly from the mobile battery or laptop batteries, which are still not able to collect it. They are lying with the consumers only. So once the EV batteries start coming up, then we will have certain price. As I mentioned, LFP should be somewhere around 100 and NMC should be somewhere around 250 rupees a kg.
Also, like, what is the kind of recycling happening, right, in terms of tonnage across India and globally for lithium-ion at the moment?
Indian recycling happening mostly in terms of black mass conversion, and this black mass is being exported to the countries where they are converting to metal for hydrometallurgy process after. Because India, nobody is producing cells. We are importing cells in India and batteries are being assembled through cells. So as of now, China, Korea or other European consumers are there who are making cells. So the volumes are at pilot stage, not big commercial level. Maybe you can say maybe few thousand tons per month.
In India?
4,000 tons per month maximum.
In India, right?
In India.
And globally, what do you think is the number of tons lithium-ion recycling?
See, you must understand that the actual volume of lithium-ion battery, even globally, would start coming in the next 3 to 4 years.
Correct.
It's still too early because the actual usage of these EVs has started only taking place 2 years back. Before that, it was only probably Tesla and some companies in China that have started. So even if those capacities are there currently, in future those capacities will fall short. Just looking at the numbers of the overall growth that has taken place in EVs in the past 3-4 years.
Also, what is the recycling demand across commodities? You mentioned you have lead, aluminium, and plastic. So recycling demand across commodities in India, and how much recycling needs to happen in organized sector as per the regulations for each commodity? I want to understand what is the market, especially for the aluminium and plastic.
Yeah. If we talk about aluminium, India is net import dependent because Indian generation is hardly 5% of our total requirement of aluminium scrap. Country imports around 1.7 million tons of aluminium scrap, and rest is being met through domestic. So you can say import dependent industry. So it's quite fragmented where a lot of people are importing and converting them into alloy and other material for second industry. When it comes to battery, particularly lead-acid battery, so the recycling happening because it's generated from the post-consumer. So most of the recycling is happening through informal sector, or when we say formal informal sector, so that is around 55 to 60%. And slowly with this regulation, it will shift to formal and organized recycling. That is happening in case of lead. And when it comes to plastic, so the post-consumer plastic like MLP or which is going to dump for single-use plastic, that is not for the recycling purpose, but other plastic like higher grade plastic or PET, that is being collected, that is being converted into PET flakes, and their rate is quite better as compared to other part of the country because we are able to collect good amount of plastic in India.
Thank you. The next question is from the line of Shivam Dave from Progeny Investments. Please go ahead.
Yeah, hello. Am I audible?
Yes, please.
Yeah, congrats on the great set of numbers. I just wanted one clarity on the aluminum volumes. I think in Q4 call you were telling about a 60 to 70% utilization for FY25. Is that something that we can achieve this year?
Yes, we are targeting around that only. So the capacity utilization will improve if the hedging mechanism is there. So we are expecting that hedging mechanism to happen in this quarter. After that, we can probably take it to the optimal level of capacity utilization also.
Okay. And on the depreciation front, can we expect the current run rate for the whole year, or is there going to be some fluctuations in it?
No, it is going to be constant from here on. Of course, the more you put in capex, you will see a higher depreciation in absolute numbers, but you can expect a similar numbers going forward.
Right. Okay, that's it from my side. Thank you.
Thank you. The next follow-up question is from the line of Meet Bharatbhai Rachas from Anubhuti Advisors. Please go ahead.
Yeah, thanks for the opportunity again. So my question is in terms of working capital cycle. So basically, currently bulk of the working capital goes to inventory. And the current working capital days is around 80 to 85, and our medium-term target is 65 to maybe 70 days. So just wanted to understand the roadmap of maybe a reduction in inventory days in next 2 to 3 years. How are we going to achieve that?
So exactly in the next 3 years, we want to bring it down to around 65 to 70 days. And this is going to happen because of more domestic scrap availability, which is kind of tolling. Although the inventory, you would see the number of days of inventory would be same, but on the other hand, you will see payables also. So the more tolling business we'll do, the less overall working capital requirement would be there. So it has already started happening, and in the next 3 years we'll bring it down to around 65 days.
Okay. So bulk of the improvement would come from higher availability of scrap domestically, right?
Absolutely, yes. Because currently a lot of our material comes from overseas, so there is in-transit inventory proportionally, which is very high. As and when we keep on increasing the domestic scrap, that percentage-wise that will come down. So overall, out of this will reduce.
Sorry. Please go ahead.
Yeah, please.
So out of this 80 days of inventory, how much would be from in-transit inventory?
So in-transit inventory takes approximately 45 to 60 days. Whatever goods are coming from overseas to India, that takes 45 to 60 days. So that proportion of the in-transit inventory will go down.
And here also you have to understand that in some cases you keep that inventory. If you're buying from your own yard, you will be keeping that inventory for around 15 to 20 days in those yards also. And then also if you buy from some aggregators sometimes, then you'll have to give them in advance some money. So the overall period would be around 60 to 90 days. From advances given to the time it reaches your factory.
Okay. Understood. Yeah, thank you.
One more thing I would like to mention here is that because we are into scrap recycling business, so one more theory we have is that we don't say no to the scrap, because even if we don't have the enough capacity, we will keep on sourcing the scrap, because that will not come back if we lose that. So we'll keep on increasing the capacity wherever required. But yes, on the other side, if we have the more inventory also, we would be happy to increase the capacity. So that is the one more concept we have for the group.
Understood, sir. Thank you.
Thank you. The next question is from the line of Omkar Mistry from AUM Advisors. Please go ahead.
Hi, good afternoon. So am I audible?
Yes.
Yeah, so my question, can you please explain me about the tire or the rubber business model? What would be the byproducts and whom we are going to sell, and the basic around the model?
So in rubber or tire, we are also currently doing recycling in our overseas plant, where we are making pyrolysis oil out of it primarily, and using it for our own captive consumptions in our smelting and aluminium refining processes. So that is one part. So we also have a plant of rubber recycling which produces pyrolysis oil based on new technology of continuous pyrolysis in India. But we are also putting up a plant to make crumb rubber initially, and will go into value addition in that segment also in future, where we'll try to find out a solution to use the same material in tires in future. So it's both. So in rubber recycling, we'll be going into tire to tire or circular economy also, and we'll also be going into for pyrolysis oil production simultaneously.
Okay, and what's the scenario about the availability of the tire in India?
So availability of tire in India is there, but we are also targeting import of tires from various locations across the globe for our operations in India.
Now the EPR concept is also working well for India, where they are coming up with a credit mechanism where we can buy the local tires, and there will be some credits generation will be there by the recycler, and the tire manufacturer have to buy those credits. So that is also working well for giving us more value for the scrap.
Yeah, got it. Yeah, thank you so much.
Thank you. Ladies and gentlemen, we'll take this as a last question, and I'll hand the conference over to the management for closing comments.
Yeah, thank you everyone for participating in this call. We trust that we've addressed all your queries during the session. However, if there are any remaining questions, please feel free to reach out to our investor relations team. Once again, we extend our gratitude to all the participants for joining us today. Thank you and have a great day.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.